Hey everyone, good afternoon. Ryan talking here from the Black Room at T3 again, and I wanted to do a video covering when I look to play day trade a stock, the day after a gap, and when I look to just ignore the stock. And it's something that we're going to talk about wide range bars and doji bars, because they both have really big implications in my timing and entries, and we're going to dive into a little bit the reason why that they do. Okay, so I had two trades called today. One was the SYMC, and that was at the open, which stopped. And then the other call was the STZ, and I'll show you guys the calls on those. And that one worked pretty nicely, which was good. The last couple of days at the open, I really kind of struggled to find patterns. Passed on some stuff yesterday. My first trade was it was in the STZ yesterday as well, and that wasn't until 10:30. Yeah, the opens have been a little bit more difficult for me than usual, and that's normally kind of my go-to, is to trade the opens on pro gaps. Okay, so as you guys know, I like trading professional gaps. We had a professional gap on the STZ yesterday, and I did play this yesterday as a short, and I also played it today, which I called in the room. Yesterday I just mentioned the sell setup, and it was actually triggering right when I got on the mic. But I played it today, and I had time to get the calls out, and it was a nice breakdown, which we can dive into. But what I wanted to cover is why I was willing to play this STZ today, and why what's a nice recent gap that we had. The Roku, for example, why I would not be willing to take this as a day trade on this day, the day after this gap. Now, this did set up nicely on the gap day, but I was not willing to play this long the day afterwards. And I'm not saying that there's not room to make money the day after a professional gap, but what I am saying is my approach and how I look at wide range bars, which we got on the Roku, why I wait at least 2 days afterwards before I look to play them as a day trade or a swing trade. Okay, so briefly, a wide range bar this is a wide range bar like on the Roku, right? A bar that its average range from open to close is significantly larger than the prior bars, and also a stock that does not have large tails on the bottom or the top, right? Doesn't have more than 20% of a tail at the bottom or the top. So this is actually a really good example. This is almost a perfect example of a wide range bar because we don't have any tails at the bottom or the top. Okay, so what this tells me is that this shows me a clear picture of the level of conviction in the Roku was a lot stronger in the buyers than the sellers on this day. Not that there weren't any sellers, because there were a lot of sellers in the Roku, but the level of conviction was a lot stronger in the buyers, and that's what's presented in this wide range bar here. Okay, the Doji bar would be like not the SYMC. We will look at that because I did play that long because it did form a Doji bar on the entry. But the Doji bar, and here's a daily chart with a Doji bar on it, looks like this, where it's almost the exact opposite, where we have a really small body here. It's almost non-existent, and really large tails in both directions. Okay, you could classify this as a Doji bar as well. It's close. This gap day is a Doji bar. That's close. Its body is a little bit larger than I would like, but these two candles are nice Doji bars. Okay, so that's the difference in the picture, where we get a Doji bar. We have a wide range bar here, Doji bar, then we got a wide range bar today. Okay, so the importance, and I'm a very visual trader when it comes to to charts. The importance for me is the picture that this shows is that the sellers are clearly in control of this STZ today, versus yesterday, the sellers were in control portion. They were in the morning, that's when I was short, but the buyer stepped into control later in the day. And so this doji bar tells me that there's indecision. This day, before we gapped down, there was no indecision, which is why this STZ was one of the best gap downs I think we've had in several months, the STZ, right? Because there wasn't a lot of indecision on the STZ, and then we ended up gapping underneath all of that, okay? So the reason why I'm bringing all this up is because the only way that I look to trade a stock the day after a gap is if on the professional gap day we have a doji bar, right? So we have a doji bar on the gap day, I can look to play the next day, and the only reason being is because on the professional gap day there was indecision. There wasn't a strong level of conviction. Okay? If there is a strong level of conviction, I looked for a base, and then I look for follow-through of the conviction. So there's a lot of times where we'll get a gap, and let me just look at some swing charts to see, because I do play these swing as well, to see if I can come up with a good example here. Here's one. PRGS. Gap day, lot of conviction in this stock. No follow-through afterwards. It really just went sideways after that. We've stayed in this range the whole time. PRGS. This is a really nice professional gap on the PRGS, but no follow-through. Okay? Now, if there is follow-through that takes place, then I will look to play this. And this is on day trades. This is on swing trades for me personally. If we do get a pattern where we get some consolidation up here, and then we get some follow-through, I'm looking to play the follow-through. Okay? So with a wide range bar, when I see a wide range bar, what I'm looking for is a base and a continuation of follow-through. But I don't want to jump in right after the wide range bar because I don't know if there's going to be follow-through or not. When I get a doji bar, what I'm looking for is the doji bar tells me that there's indecision, and what I'm looking for is a break one way or another on the indecision. Okay? And that's what we got today, where on the 15-minute chart here, we had indecision yesterday, we got this nice break lower, and then this really nice base here. Right? And so we played this 5-minute breakdown, which was a morning breakdown. 5-minute pattern here. I played this short under the low of the day here. Once we got this doji bar, well, actually, once we got this green bar here, we got triggered in, pushed back a little bit. Stop was above this base, and that was the short. Let me show you here the pictures for the STZ. This was the call at 11:04. STZ short. Well, I'll just show you all of them while we're here. This is the management, trailing half 1 minute bar by bar as it came into target. That's where we got out half. The back half we reduced the stop. We looked to trail a quarter to reduce our exposure because our R to R was shifting, and then we trailed the last quarter 5-minute bar by bar. So we got pretty close to the bottom. This is where we ended up getting out here. At the bottom. It did make another new low and reverse, but overall we captured they don't always work it out as nicely as this, especially the runner, but we captured a really nice move here. It did go lower afterwards, but I wouldn't have wanted to live through this anyway. So the first exit was over the 1 minute bar here. Well, let's go over the entry here first. So what I saw was a level of conviction. We got some wide range bars and then a base sideways here. Right? So just like what we were talking about, we had wide range bars and a consolidation. And what am I looking for? The continuation of the move this morning. And I'm also looking for this doji bar shows indecision on the daily chart. I'm looking for follow through to the downside. Okay, So this was the short. We got this doji bar here. Man, we are covering left and right. We're covering doji bars and wide range bars, right? I mean, it makes up almost all of my trading here. Okay, so these concepts I think are really critical. So we got this doji bar here, and that was Sammy refers to this as a battle bar, and Sammy's a phenomenal trader, another moderator in the black room, and I've learned a tremendous amount from Sammy, and he calls this a battle bar, right? So we're in this base, we get this battle bar, we come down, we retest the bottom of the base, we got this green bar, that was 1104, just after that, inside this red bar here, and we broke lower, triggered in, stop is above the base here, right? The recent base, it's not above the whole base, although you could use that as a stop, but once we got this battle bar here and this retest, I was okay using it right above this base. Could have given it to the high of the base. Wouldn't have made that big of a difference, honestly. I felt like if this got taken out, then this would have as well, so that's the above the battle bar. That's what I use, right? Retested here, and then continued lower. Now, this was up about an R here, and we had a strong pushback, and I felt like whoops, that was 3 minute. Let's go to 2 minute. We had a strong pushback, and I was kind of feeling like we missed the target, but really liked this lower. The big target was 201.50, and the first target was 203.05. Now, I ended up getting out of this early. Once we broke this topping tail, this is where I got out right here. This trailed over the 1 minute bar. Let me go back here. Right here. This was the exit. It's a little bit early, right? I was looking for this as a target. So got out a little bit early. We lived through this. I told the guys in the room that I really just kind of wanted to book a winner here. It was up a little bit over like an R and a quarter, and so I decided to trail some. Wasn't really too thrilled about that because literally 1 minute later it got right to target, which was like a little bit over an R and a half. So I felt a little bit bad about that, but I was okay with it, right? I really was okay with it. We made this new low. I didn't want to take another strong pullback here without reducing my exposure, so that's where we trailed some. And then we trailed some again over this 1 minute bars high here, right? This one. Out a quarter, 202.60, right here, right? So once we got this move lower and we started getting wide range bars at the end of the move, that was this bottoming tail, right? Started getting wide range bars at the end of the move here. Then we looked to trim another quarter. And then we were coming in, the big target down here was 201.51, and we trailed 5 minute bar by bar. We were very close to that, and so I took the rest of it, right? So let's recap on this trade. Wide range bars and doji bars, right? When the trade the day after the gap. We had a doji bar showing indecision the day after a really nice professional gap, so I'm okay to play the day afterwards because of the indecision that was shown here. Now, day afterwards comes. What happens? We get some conviction on the sellers here and a base. So we get a wide range bar. We base sideways. We do show some indecision inside of the base, this doji bar here, and then we break under that doji bar's low, stop above it, and we continue lower. Okay? Wide range bars, doji bars. The importance is when to use one and when to use the other. So doji bars I'm willing to play after the break of them. Wide range bars I need to show an additional sign where it's a base or a pullback inside the wide range bar. So if this would have, let me get my pen here. Sorry, I said this last time too. I need to restart my pen. But if we get a wide range bar, and here we go, and if we did a pullback, then I could have looked to take a sell setup here on some sort of confirmation, right? But I can't play right afterwards. All right, I need to wait for a sideways base to show the sellers are still in control, and then a continuation of that pattern, okay? So that's why I was okay playing the STC the day after the gap. Now, this looks like, I mean, we still have 35 minutes left, but if this closes at the lows, I can't play this tomorrow. can't play it tomorrow. Can't swing trade it short, which I think it looks good as a swing short, but I can't day trade it if we close at the lows because we got this wide range bar here, right? Okay, so let's look at the other call that stopped the SYMC. SYMC was a gap up, and this did have some resistance to the left, but there was a couple things that I liked about this. One was we had this nice gap down that got bought. We were pulling back, doing a buy setup here, and so what I was looking for is some follow-through from this possible ending gap down. So that's why I liked this SYMC. We got some more selling here, and so anybody that was short here or anybody that was looking to get long after we got this gap up, I was looking for a continuation of that. Now, as you can see, we didn't get that today, right? But I did like this on the long side, and the entry was over well, look at the 1 minute, and it was over a 2 minute bars high, but we had this little breakdown failure that I liked on the SYMC, which is why I was willing to play this long. So we got this topping tail, and then we just broke under the topping tail and then immediately reversed. And so that was the long. It was over 2030 because it just broke, and I didn't have time to put the numbers in. Over 2030, and stop was low of the day, which was $20. Right, so that was the long. Triggered, moved up nicely, and I was looking to see, I was kind of expecting that we would get a pullback here, and unfortunately the buy setup ended up failing and continued lower and stopped me out. But I thought this was a nice pattern. We jump out to the 2 minute. I'm pretty sure it was a 2 minute bar. 2 minute was kind of a doji. Yeah, 2 minute bars, doji here, right? Long, short, and I'm looking for a continuation of that. And we got some, but this wasn't up that much. Maybe 3/4 of an R or something. Really wasn't up that much. Wasn't near target. I mean, I really thought that this had room to move all the way up to $21, which was the high of this green candle here, right? $21 here before I looked to take any, and unfortunately came back and stopped me out. But this was a good pattern. This is a pattern that, like, if this came up tomorrow, I would play this tomorrow. It would have been better if this was a bullish stock instead of a bearish stock, but I still thought this was okay. If this comes up tomorrow and I see it, I have to push the button. I'm playing it, right? And the thing that I really liked about this was we got this small breakdown failure under that 1 minute, and then we reversed and went higher. And so this was really on the SYMC, this was kind of the now or never moment for me, where if it was going to go, it was going to go, and it didn't. And so, you know, the pattern ended up failing, and the buyers didn't step in, and we sold off the rest of the day. So I'm glad that I controlled my risk. I got out here, right, and that this was an opportunity for me to get in long if this moved up, and it just didn't happen to. But it was a doji bar that I was willing to play over the high. Okay, so hopefully this covers the concept of when I look to play the day after a gap and when I don't, right? So the SYMC, we got this gap down, wide range bar, can't play this long this day, right? Have to wait for some follow through, which is why I was willing to play this here, right? Same thing with the Roku, right? I'm just looking at some other charts here. Roku can look to play this long if this sets up here. It's getting a little bit sloppy. This also isn't that good. It's okay. We're into like some all-time highs here, but this wide range bar, if we look to get some follow through here and set up nicely and start to transition on the 60 minute, which is looking pretty rough right now, but if this does start to follow through, pattern starts to tighten up, daily chart becomes a little bit less extended from the 20 MA, then I can look for follow through from this wide range bar on the professional gap, but so far it hasn't given me any, so I'm not looking to play it long. Oh, here's a good example. The VERI had a day trade in this the other day. Nice gap down, right? This is more of a swing example because I'm just looking to the left here where my swings are. Nice gap down, doji bar. Can I play this the day after? Sure. Short, low of the day by high of the day. Would have gotten a target 1. I remember this selling off at the open and went right to a target 1. I didn't play this swing short, but I absolutely could have. It's a pattern that I could have played, right? So I'm looking to play, I can play short directly after indecision, not after a convicted move. That's me personally. I want to play in the same direction as the convicted move, but I need to wait for some confirmation to see if that level of conviction is going to follow through. After the doji bar, I'm looking for the first sign of conviction, which is what we got on the SYMC this morning, right? When we got those wide range bars in the morning, right? Where we had a doji bar yesterday, and then we had this, sorry, not the SYMC, STZ, excuse me, I'm sorry. The STZ, we had the doji bar, and then at the open we had the conviction step back into the stock here. And that's what I'm looking for the follow-through, okay? All right, guys. This is wide range bars, doji bars, briefly how I use them. Inside of a vacuum, I think it would be incredibly difficult to make money, but I just wanted to give you guys a little bit of insight of how I look to use both of those, and when I can play after one and when I need to wait, right? And then inside of that, like the STZ, there was very specific entry patterns that we were looking to see before we were actually looking to short it, right? So I hope this helps you guys, and as always, I hope you guys stay in process, and I'll talk to you guys soon. Thanks, everyone.